In this video, I'll show you everything you need to know about trading trendline breakouts using RSI for confirmation. So what you learn in this video is, first, how to identify real breakouts, not the fake ones. Second, how to use RSI to confirm those breakouts. And third, a simple trick with a mini trend line to make your entries even stronger. So without further ado, let's get into it. What's a trend line? Quick reminder. Alright, just a quick note before we jump in. A trend line is just a line that shows the direction of the market. It connects the highs or the lows to help you see where price might bounce or break. In part 1 of this series, we went over how to draw trend lines properly and also covered continuation setups. So if you missed that, go check it out first. The link is in the description. What's a trendline breakout? A trendline breakout happens when the price moves through a trend line that it was following before. This can mean two things. The trend might be changing, or the price could be a big move in the opposite direction. But here's the thing. Not every breakout is real. Some are just fake moves that trap traders. That's why we need confirmation, and RSI can really help with that. How RSI confirms the breakout. Let's say you're watching a downtrend and suddenly the price breaks above the trend line. Now to check if this breakout is real or just a fake move, look at the RSI. Here's what to watch for. If RSI goes above 50, that's your first sign that buyers might be stepping in. If it keeps going and reaches above 60 or 70, that shows strong bullish momentum. And the breakout is more likely to be real. Now flip it. If you're in an uptrend and price breaks below the trend line, check if RSI drops below 50. That shows the bulls are losing control. If RSI goes even lower, like under 40 or 30, that's a strong sign that sellers are taking over. Pro tip, watch the pullback low or high. Here's a simple trick that works in both uptrends and downtrends. After a breakout, the price often pulls back before continuing. Look at the swing low or swing high formed during the pullback. Then wait. In a bullish breakout, price breaks above a trend line. Wait for a small pullback. If the price breaks above the swing high of that pullback and RSI stays strong above 50 and ideally above 60, that's your signal to go long. In a bearish breakout, price breaks below a trend line. Wait for a small pullback. If price breaks below the swing low of that pullback and RSI confirms the move below 50 and ideally under 40, that's your signal to go short. Watching these key levels gives you a cleaner and more reliable way to confirm breakout strengths and avoid fakeouts. Downtrend breakout real example. Now let's look at a breakout in a downtrend. In this real example, the price is moving in a downtrend, but then it breaks above the trend line. Your first signal that the trend might be shifting. When you check the RSI, you see it has moved above 50, maybe even heading towards 60, showing that buyers are gaining control. Now watch what happens next. If price breaks above the swing high created during the pullback, you've got yourself a solid long setup. Quick example, breakout in an uptrend. Leave a quick like before we move on. It keeps me going. In this real example, the market is in an uptrend, but then price breaks below the trend line. That's your first clue that something might be changing. Next, check the RSI. If it drops under 50 or even closer to 40, it shows that bearish momentum is building. Then comes a strong red candle like a bearish engulfing, confirming that sellers are stepping in. Now here's the key. If the price breaks below the swing low created during the pullback, that's a high probability short you don't want to miss. Why this combo works so well? On their own, trend lines can give you lots of false signals, and RSI by itself, it doesn't always show the full picture either. But when you combine them, you get structure, trend lines, plus momentum, RSI. And that's a powerful mix for finding real breakout trades and avoiding the fake ones. That's exactly why professional traders often use both together, because structure shows where price might react and RSI helps you see if the move is really strong or not. Alright, so that's another simple and effective strategy you can start using right away. If this video helped you, give it a like and subscribe to the channel. It only takes a second and really supports what I do here. Thanks for watching and see you in the next one.